In this video, I'm going to show you the secret behind the best LuxAlgo day trading strategy ever. It's all about using the easiest price action techniques that have completely transformed trading across not just one, but multiple time frames like the 3, 5, and 15-minute charts. With this groundbreaking approach, utilizing one of the most accurate indicators on TradingView, you're about to see how to take your day trading to a whole new level. This is your ticket to make a living with trading, and most importantly, it does not have a bunch of rules to follow, making it suitable for beginners as well as seasoned traders. Whether you're into cryptocurrencies like Bitcoin and Ethereum, or you prefer trading major Forex pairs and stocks, this strategy is versatile enough for all. To learn all about this strategy, let's start with a clean chart. Currently, we are looking at the price of Bitcoin USD on a 5-minute time frame. The strategy we're diving into today includes two key indicators. To kick things off, let's add the first one. You'll want to click on the Indicators tab and search for LuxAlgo Price Action Concepts. Go ahead and add this to your chart. It's a paid indicator, and you might wonder, why pay for something when there are free options? I get it. I was there, stuck in a cycle of no profit with free indicators for years. Switching to LuxAlgo Premium changed everything for me, turning endless losses into real profits. As we explore setting up LuxAlgo, remember, investing in the right tools can be the best decision for your trading success. Now let's open the settings by double-clicking on it and adjust it for this strategy. For this strategy, we only want to use the internal market structure. So here we choose All. We leave the look-back length by default, and we are going to disable everything else that is actually enabled. By the way, this video isn't sponsored by LuxAlgo. However, using my link in the description gets you up to a 20% discount. Next, we're going to add our second indicator to the chart. So head back to the Indicators tab, search for the LuxAlgo sessions, and add it to your chart. Once added, let's dive into the settings. Within the input section, we want to disable everything except for the first session. Make sure you set the time zone setting to your specific one, and we are good to go. Now, before we get into the exact trading rules, let me give you an oversight of what we can spot now on our chart. First of all, we are only going to be looking for signals given by the Price Action Concepts indicator within our New York session. We can see here different price action labels like the bullish or bearish break of structure label. A break of structure label means when prices in a market either go higher than the last high point during an uptrend, we call this a bullish break, or drop lower than the last low point in a downtrend. This is a bearish break. It's like the market is saying, we're still moving in the same direction and here's the proof. A change of character or chock label is like a signal that the market might be about to switch directions. It happens when prices break through the last low point in an uptrend. We call this a bullish chock, or the last high point in a downtrend, called a bearish chock, hinting at a possible turnaround. We can also spot here chocks with a plus and chocks without a plus sign. So let me explain you what the difference is. A normal chock happens when the market makes a move that hints at a possible change in direction without any previous warning signs. In contrast, a chock plus shows up after there's already been a hint that the market might turn around, like failing to make a new high in an uptrend or a new low in a downtrend. So chock plus comes with a heads up, while a normal chock is more of a surprise move. Now let's dive into the exciting part, understanding the trading rules so we can use this strategy to make some nice profits. We'll start with the criteria for entering a long trade. There are two conditions only that need to be met for a long entry signal to be considered valid. First off, we've got to be trading during the New York session. Next, we're on the lookout for two consecutive, uninterrupted structural changes. These could be either a bullish chock plus, or a bullish BOS signal. Importantly, the second change needs to happen while we're in the New York session. Once we've checked off these conditions for a good chance to buy, we move fast. We place a buy order right after the candlestick closes. To keep our money safe, we set a stop loss just a bit below the most recent low point. This way, we're cutting our losses short if things don't go as planned. And for our take profit, we are going to target a 1 to 2.5 risk to reward ratio. This strategy helps us make the most out of our trades. Now let me give you another example for a valid long entry signal. First off, our trading action happens during the New York session. What we're looking for next is simple. Two green labels in a row showing us the market's moving up. It doesn't matter if it's a bullish chock, a bullish chock plus, or a bullish break of structure signal. As long as we see those two green labels without a break in between, we're good to go. Crucially, the second signal must occur during the New York trading session. This timing is key to our strategy. Once both conditions are met, we place a buy order at the close of the candlestick. We set our stop loss just a bit below the most recent low point. And for our take profit, we are going to target a 1 to 2.5 risk to reward ratio just like this. For entering short positions, let's flip our approach to align with selling opportunities. There are two key conditions we look for in a valid short entry signal. Initially, we ensure we're operating within the New York trading session. Our focus then shifts to identifying two consecutive, uninterrupted structural changes signaling a downtrend. These could manifest as a bearish chock, a bearish chock plus, or a bearish BOS signal. It's vital that the second of these changes also unfolds during the New York session. Upon confirming these criteria, we're primed to act swiftly. We execute a sell order immediately after the candlestick closes. To safeguard our investment, we place our stop loss just slightly above the most recent high point, thereby minimizing potential losses if the market moves contrary to our expectations. Our target for take profit is set to achieve a 1 to 2.5 risk to reward ratio, optimizing our trade outcomes. Now here's another scenario for a valid short entry signal. During the New York session, we look for two red labels in succession, indicating the market is on a downward trend. Whether it's a bearish chock plus, or a bearish break of structure doesn't matter. The crucial point is that these two red labels appear back to back without interruption. Equally important, the second signal must be spotted within the New York session time frame, as this is central to our strategy. Once these conditions are met, we place a sell order at the close of the candlestick, set our stop loss just above the most recent high point, and aim for a 1 to 2.5 risk to reward ratio to maximize our trading efficiency. Remember, a great strategy is complemented by great tools. LuxAlgo premium indicators are a game changer. Using my link in the description not only supports my channel, but also gets you up to a 20% discount. If you want to learn my best strategies for trading crypto, forex, and stocks, check out one of these videos.